All right. Hello, everybody, and welcome to MSUFCU's Financial Education Seminar Series. We appreciate all of you joining us tonight. These presentations were created with you in mind, with the intention to give financial education on a number of relatable topics to help expand your knowledge of finances while connecting you with resources right here in our community. We have a number of diverse presentations planned for this year, and you can explore and register for them by visiting msufcu.org/events. Tonight's event is being recorded. You can rewatch or share this presentation by going to our YouTube. So youtube.com/MSUFCU. Then you can select the MSUFCU seminar series from the playlist options. My name is Jessica Rubio. I'll be our facilitator for this evening. If you have any concerns or technology issues, I invite you to reach out to me in the chat. We'll also be taking questions that you have for our presenters this evening. Those can be submitted through our Q&A function at the bottom of your Zoom screen. And then we'll also provide additional information and resources in the chat throughout tonight's presentation. Tonight, we have two experienced mortgage lenders joining us to present on the basics of home buying. So allow me to introduce our guests, Andrea Murray and Debbie Carpenter. Welcome to both of you, and thank you so much for joining us. I will turn it over to you to introduce yourselves to our audience, and then we can lead right into the presentation.
Thank you so much, Jessica. My name is Andrea Murray. I am a mortgage officer here at MSU Federal Credit Union, and I have been with the credit union for 25 years. It seems like only a few. I can't believe it's been there. It's been that long. It seems incredible that I've worked anywhere that long, but I'm very excited to be here with you today.
Hi, my name is Debbie Carpenter. I am a mortgage officer here at the credit union. Been at the credit union almost 10 years. Like Andrea, hard to believe. It's been almost 10 years. And I love that I get to work alongside of Andrea. She's a wonderful resource to have. Really excited to be a presenter on this topic and hope everyone enjoys the presentation.
So we can just kick things off. We'll go over what we're going to talk about tonight. Of course, we've got our introductions. We will discuss the pre-approval process. We'll also discuss the loan process. And that's from originating the loan to closing. So from when that loan starts to when you are walking into the door of your new home. We will talk about property types that we can approve and hold a mortgage on. Loan types, we'll go over our income and asset requirements. And of course, probably one of my favorite pieces of conversation, we will discuss credit. So please, if you have questions, just let us know and we will do our best to address them as we move through the presentation. So you can obtain a pre-approval quickly and easily with MSUFCU. You can do that by submitting an application, either online, on a desktop, or our mobile app. You can do that by calling us on the phone at 517-333-2424. Our application extension is extension 2105, or you can do it in person. Just give us a call or set up an appointment online. Now, with the application, we will ask you certain information that we have to make sure that that application can move forward. So we'll ask you for your income, your assets, investment documentation, accounts that you have. You can actually link those in the application to make it easier, or provide statements. Once you authorize a copy of your credit report to be filled and pulled, that application is completed and it will come right to us, and a mortgage officer will be able to go over that and have all the information that we need to either issue a pre-approval or talk to you to get a little bit more information. Now, application and the pre-approval are just the very beginning and very small part of the mortgage process. So once you get your application, you will have a pre-approval letter. Or once you get your pre-approval, you'll have that letter that you'll provide to your realtor. And that's when the fun really begins. You can start looking at homes. And I know sometimes that's really exciting, sometimes it's really stressful, but it's a pretty crucial part of the mortgage process. Some people find a home immediately. That happens. Sometimes people find a home before they even knew they wanted to buy a home. That happens. Sometimes it takes months. So the first thing is to get that pre-approval because that often gets you in the door. And you want to make sure that when you are buying a home, that you are actually getting a home that meets your needs. So having the right realtor, that's really going to be the person that has your back when you're in the mortgage process, when you're looking at the houses. So finding that realtor, it's really important. You want to interview your realtor. You want to ask for references. If you don't have a realtor, please reach out to us. We have a program called Affiliated Moves where we can match you with the realtor that can make sure that you end up with the best purchase for you. Now, once you find a home, this is where it really gets interesting because there could be a lot of competition for your home. Sometimes several offers will come in and the seller will decide which offer they would like to accept. So if it's not your offer, that's okay. You'll continue looking for a home. If your offer is accepted, then that's when the fun really starts because that's when you will start digging into the home a little bit more. So you have inspections that you want to do. And I cannot stress the importance of having inspections. Most of us are not experts on houses. So it's important to lean on the experts throughout the mortgage process. And one of the first experts that you'll lean on is your inspector. They will go over the house. You actually get to go with them. So ask all the questions, and make sure you feel comfortable with them and that they're the inspector that's going to answer the questions that you have. They will give you a report that goes over everything in the house, things that you may consider to be a big deal. Maybe it's not a big deal. Things that you think aren't a big deal, maybe they are a big deal. So it's really important to lean on the expertise of your inspector and an agent to make sure that you feel comfortable with the condition of the home. If the inspections are less than satisfactory, this is your opportunity to decide that you are not ready to move forward with this home and you can back out of that purchase at that time. If you are comfortable with the inspections, that's the time then we would move forward with ordering the appraisal. So once you have a contract, you want to make sure that you get that to your mortgage officer because your mortgage officer is going to review the contract and they're going to provide disclosures to you so that you have an estimated payment, you know what the taxes will likely be, some estimates for things like insurance and private mortgage insurance. So you know what that payment is and make sure you're comfortable with that liability moving forward. Once you give us the go-ahead to order the appraisal, then we will take your file and we will move it on to our processing team. Our processors are fantastic and they're the ones that really move the file from beginning process and make sure it moves all the way to the end. So the processors will work with you. They'll work with your loan officer, the agents, the title company, the appraiser, everyone, just to make sure that we have everything is done correctly and we have all the information that we need. Now, as a buyer, I will say that this is the time that can be a little frustrating because it's mostly waiting. It's a lot of waiting. And then when we need something pretty quickly. So if you are in the mortgage process and your processor or your loan officer asks you for something, please get it to them as soon as possible. And then the other thing that you'll want to keep in mind is that several mortgages are happening at the same time. So even though we order your appraisal today, it may be a week or two before the appraiser is able to go out to the property and take care of everything and get the report back to you. So it's really important that you are feeling comfortable with waiting. And while you're waiting, you are getting ready to move. You've got a lot going on. Once the processors get done with all of the stuff that they're doing and they get the file ready, they will send your file to our underwriters. And the underwriters are the ones that are responsible to ensure that all of the documentation for the file is accurate and valid and everything meets our guidelines. Once they have cleared all those conditions, everything is as it should be, they will issue what's called a clear to close, and that lets everyone in the transaction know that we're ready to move forward. And you will get a closing packet 3 days before close with all of your final numbers. You'll go to closing, and then you will own a home. So keep in mind a little bit of a wait. Closing is usually anywhere from 4, 5, 6 days after you receive your clear to close, but that gives you time to make sure that you've got all your ducks in a row for moving and all the documentation you need, and everyone can enjoy closing while you make what is probably going to be one of the biggest purchases of your life. Now we're going to go over who exactly is involved in the mortgage so that it makes sense. And keep in mind, you know, the credit union is here to help you with every step of the process. And your agent is here. Your agent is always going to have your best interests in mind. With the affiliated moves program that we talked about, if you don't have an agent, that's an excellent opportunity for you to meet one, and you can actually get a cash rebate on the agent's commission, both for the sale of a house and purchasing a house. So keep that in mind if you're in the market. Your inspector, like we said, that's the expert on the house. They're going to check all the little things that you may not even know you should check. So when I bought my house, the inspector told me things that I'm still using 15 years later. It's so important to get a good inspector. Now, when you are writing your contract and you're writing your offer, one thing you want to keep in mind that some purchase agreements might waive the requirement to have an inspection. Ultimately, that's going to be your decision, but you want to make sure that you are very well aware of what's in that purchase agreement. And if it does say that you're comfortable with that. So make sure you're reading everything before you sign that. And then, of course, we have the appraiser. The appraiser is who is going to give us the market value on your home. And keep in mind that this is not someone that you can select. As a buyer, you cannot pick your own appraiser. This is going to be a neutral party that the credit union or your lender will select for you. And then you'll also have your title company. Oftentimes, your agent will have a title company that they work with. The title company will look at the title work and the ownership of the home to make sure that there aren't any issues with the ownership or any liens placed on the home. That's a protection for you. So the title company will have various fees and different requirements. Those will all vary between the company. But all of these people are all working in tandem to make sure that you have a really successful transaction. So ask all the questions. It's really important that you're comfortable with the transaction. You feel like you know what's happening and that you feel like you're having all of your questions answered. So never feel like you're putting anyone out. You can ask all of the questions. It's a very big deal and it's perfectly fine. And we are all happy to help. Okay. Now we are going to talk a little bit about the different types of property that you may get a mortgage for. And the first is probably the most common, which is an owner-occupied primary residence. And this would be a single family home, a condo. It could be a duplex or even up to a quadplex, as long as you as a borrower are occupying one unit of that. We are able to go up to 4 units. And then we have as little as 0 for some specialty products up or 3% down. So if you are concerned about keeping your closing costs low or worried about how much you're spending out of pocket, then this is something to think about, the type of property you have and how much your down payment is. The down payment can vary with the property type. So if you do have a particular property in mind, maybe you're looking at a manufactured home or a duplex, you do want to make sure that your loan officer is aware of that so that they can provide you with the correct guidance on how much we'll need to put down. We also have vacation homes. So a vacation home would be a second home. Typically, it's not going to be near where your primary residence is. So if you live in Lansing and tell us that you're buying a vacation home in Holt, we're likely going to question that. But if you live in Lansing and you're buying a vacation home in Traverse City, that makes a lot of sense. So for our vacation homes, we want to make sure that it's suitable for year-round occupancy. Generally, like I said, it does have to be a bit of a distance from your primary residence. And we do require 10% down with our down payments. I'm sorry, with our second homes. You'll want to keep in mind that a vacation home, you can actually rent it out part of the time, but it has to be rented out less than half of the calendar year, which means that it's still what's considered owner occupied for the majority of the year. And when the home is owner occupied, that means that you qualify for lower rates and a lower down payment because it is a second or vacation home. We also have a non-owner occupied or an investment property. This would be a home that you're purchasing. Maybe you're purchasing it to rent, or strictly maybe you want to do Airbnb, so it's for a business purpose. The owner, the buyer, has the intention that they're renting this out to other people, not that they're using it as one of their residences. And the guidelines for non-owner occupied are a little bit different. So we do have a maximum of a 15-year term with the owner occupied home. Typically, we can go 30 years with that. An investment property is going to have a 15-year term. We do have a minimum of 20% down. And of course, keep in mind that this is going to be financed by an individual. So this is a mortgage, a home that you're buying as a person, not as a business. We're also going to talk about some of our popular loan products that we have. Oops, one more. I forgot our vacant land. So if you are looking for vacant land, we've got you covered there too. Vacant land would be either property that you're buying for the purpose of building a home or just because you want to have some vacant land. Maybe you like to hunt, or there's property next door to your current home and you want to make sure that you protect that. There are all kinds of reasons that people get vacant land, but that also has a 15-year term and at least a 20% down requirement. Now, we do offer conventional loans. The credit union offers mortgages in 20 states right now. We're always looking to expand, so keep your eyes and ears open. We offer competitive rates, low fees, typically as low as 3% down, although we do have opportunities for a lower down payment. And then we have mortgages from 10 years to a 30-year term. As a first-time home buyer, we do offer a $500 credit off of closing costs. Interestingly, a first-time home buyer is someone that has not owned a home in the last 3 years. So if you owned a home and sold it 5 years ago, guess what? You are now a first-time home buyer. And you can take advantage of that first-time home buyer coupon again. When you are purchasing a home and you need assets for the home, those can come from a variety of places. So from your savings, from a retirement account, it can be gifted from a relative, it could be from something else that you owned that you sold, or it could even be a loan from something that you own. So say you have a car that you own free and clear. You could put a loan on the car and pull equity out of that. What we can't use are unsecured borrowed funds. So if you just went and got a signature loan, we wouldn't be able to do that. And then one of the other things that I think it's important to remember is if you are putting less than 20% down, typically you are going to have what's called private mortgage insurance. That's a requirement on most purchases with less than 20% down, and private mortgage insurance, the more that you put down, the less that it costs. So it's based on your credit score, the term of the loan, and your down payment. But it's something to factor into your calculations when you're looking at that. We're going to talk about some of our different loan products because we do have some pretty cool ones. We're going to start with what we would call our Heroes loan. So our Heroes loan is fantastic because it is a 0% down program. So the only thing that you have to pay as a borrower are the closing costs. And those are things that are paid, origination fees, maybe title company fees, appraisal, inspector, prepaids, all of those things. But you don't have to put 3 or 5% down. So you can move forward with much less out of pocket. Of course, you can also talk to your agent and maybe they can work with your negotiations to even have some of your closing costs covered by the seller in the form of concessions if you're really looking to keep your out-of-pocket costs low. With the Heroes loan, it was designed for select employee groups. I believe this came out during the pandemic, around the pandemic, and we were looking at opportunities to assist buyers who could certainly afford a mortgage payment, but maybe we're having a difficult time saving for the down payment. So we have government workers, utility workers, educators, healthcare workers. There are tons of people that qualify for this. Credit union employees, construction trades, there's so many. So if you are looking for a mortgage and maybe your cash to close is on the cash that you have available, you want to keep some of that, or you haven't been able to save as much as you wanted, I would check with your loan officer to see if the Heroes loan is a good option for you. One thing you want to remember is that private mortgage insurance is required on the Heroes loan, and one borrower, at least one of the borrowers on the mortgage, has to qualify through their employment. So if you have more than one borrower, say perhaps you have a husband and a wife, and the husband is an electrician and the wife works, I'm just trying to think of a place, she works at a factory. Because the husband is an electrician and he qualifies, then they would both qualify. Now with the mortgage, the Heroes loan, we also want to remember that we will have to have what are called reserves. And reserves means that you have additional money besides your closing costs. And those can be held in a retirement account. It doesn't have to be actually in your bank account. It's just money that shows if something happened, you have additional resources to pay the loan. And this is an excellent option for our first-time home buyers or just anyone that hasn't had the time to save maybe as much as they wanted or weren't quite expecting how much the closing costs were on a mortgage. I hand it over to Debbie, and she's going to go over our construction loans.
Awesome. Great job, Andrea. I will try to do an equally good job. So one of our other loan types that we offer is construction to permanent. This loan is designed for borrowers who are looking to build their home rather than buy an existing home. These loans are only offered in Michigan and Illinois at this time with as little as 10% down. Again, things can always change. We're always looking at expanding our offerings. So stay tuned, this could expand. So we work with your builder, okay? The builder would be approved by the credit union, okay? We have a process that we can review your builder and get them approved to work with you and us on your new home to make sure it's a smooth application, planning, closing, and build process, okay? Your rate will be locked in, okay? There's only one closing, and your first 12 months are interest-only payments while the home is being built. After that 12 months, we'll convert it to a regular mortgage with escrow of taxes and insurance if that's something that you prefer to do. So during the first 12 months during the build, your builder will request draws to as they complete one part of the build and move to the next part. Those draws we build into the cost. An appraiser goes out to make sure that the progress is moving forward and we're on track to have the build done on time. Okay. So like I said, this is one easy closing, one closing. I'm sorry, I'm just drawing a blank here. We also offer a free re-amortization. If that's something that maybe your build comes in under budget, we can recalculate your mortgage and your monthly payment. Okay. Okay, we're going to talk about income and employment. Lots of types, full-time, part-time, bonus, commission. We see it all, and we will ask for the appropriate documentation based on your income type. Most income is W-2s with pay stubs. If you're self-employed or you make a lot of commission, that can be through tax returns that you provide your loan officer. Your loan officer is going to be explaining exactly what documents that we need, be your resource and help you provide the documents that are needed to avoid any delays. Okay. We do require a 2-year employment history, not necessarily 2 years at the same employer. Some income, like part-time, bonus, commission, self-employed, there are some that we do need that 2-year history from that same income source. Again, your loan officer is going to be able to have that conversation and explain that in full. Okay, so there aren't any, again, delays. Okay. Assets. What are assets? Like Andrea said earlier, assets can be a variety of things. Checking, savings, stocks, investment accounts, retirement accounts. We do require statements to verify those assets. Again, we will tell you exactly what we need. for your particular application. So we know everything is in your application that we know we're going to need. Your loan officer will, early in the process, have a conversation about what accounts you're going to be using for your down payment and closing costs. Okay, and again, if those are coming from deposits right here at the credit union, those are all keys to keeping your application moving forward. And then we'll request any additional statements as needed. Okay. Transaction fees, closing costs. These are closing costs are fees, costs to do the mortgage. Some are paid to the credit union, some are paid to your agent, title company, appraiser, the inspector. We can go through all of those costs with you because it can be overwhelming. This is not a process that you do on a regular basis. So we're happy to go through that breakdown and explain and answer any questions that you have. So you're informed and you're comfortable with your closing costs. Okay. Okay. So escrow, I explain escrow as a mortgage savings account. This is a part of your monthly mortgage payment that you would make to your lender that goes into an escrow account to pay for your homeowner's insurance and your property taxes when those come due. So part of your, like I said, so part of your monthly mortgage payment, we're budgeting to have those two items paid for you on your behalf. Okay. And reserves, again, like what Andrea said, these can be in a variety of different accounts. These are just additional savings beyond what you're bringing to closing, just to show you have additional funds should you need to get to them for an emergency, repair, what have you. Okay. Okay, do I have enough assets? If you're just starting out and wondering if you could be pre-approved, give us a call. We've got some great calculators that we can use. We can run some numbers with you and talk to you to see, well, do you qualify? Does your income qualify? And then we can also have the conversation about the assets. So here we've got an example purchase price of $200,000 with 3% down, which is 6. Estimated closing costs, homeowners insurance for the first year, our estimated escrow that we would collect to set up that escrow account. You can see how quickly that adds up. And it's always better to have this conversation up front so there aren't any surprises when you apply. So we can kind of break all that down and explain what all is involved. Okay, again, we've got some great calculators at our disposal to use, and we're happy to run these numbers for you. Let's see. All right, credit scores and triggers. Credit scores, very important. We're going to pull a hard credit inquiry from each of the 3 bureaus. As you're preparing to apply for a mortgage, we encourage members to pull their soft pull score, see what is reporting, make sure there isn't anything that you don't recognize, errors on your credit report. Now would be the time to take action and resolve those items before you apply. Okay, pay down any credit cards, pay off debt as much as you can. So you're going into the application process with as little debt as possible so you can maximize your opportunity to be pre-approved, for the number that you're seeking. Okay. So here on the chart, you can kind of see where the credit scores are. The higher your credit score, the better your rate. Okay, your rate will be determined by credit score, your loan term, and how much you're putting down. We offer rate incentives for folks that are in the 740 plus range. Okay. We refer many members to www.annualcreditreport.com, again, to view what is reporting, to make sure there aren't any surprises when you apply for a mortgage. Okay. If you track your credit score using, like Credit Karma or credit card app, that's fine. At least you're doing something to stay on top. And if you see a decline, then you've got that notification that you need to look in to see what's going on. Let's see. After you apply, you may, well, you probably will be inundated with phone calls from other lenders. That is due to the credit reporting bureau selling that inquiry information to those lenders. Those lenders know you just applied for a mortgage with the credit union, so they want to try to get you to bring your application and your business over to them. There was legislation recently passed, so hopefully by next year, that practice will stop. But there is a way you can go to optoutprescreen.com. It's going to take about 4 to 6 weeks to get you off of that list, and you still may get some calls, but that will minimize the calls that you get for probably the first 2 weeks after you apply for a mortgage. Okay, so building healthy credit scores. 35% of your credit score is made up of how well you've paid. Very important that you pay all of your obligations on time. Okay. We recommend that 30%, you use no more than 30% of your available credit that you have available. Even better yet, to pay off each month and not carry a balance. Okay. That's going to be, you need to determine what that looks like, but best to pay it off every month. And the length of this credit history, is all of it new? Have you been with the same creditor for 10 years? Or did we just open this account last week? Okay, that's 15%. 10% is the variety. What kind of credit do you have? Is it all credit cards? Is there credit cards and maybe auto loans, maybe personal loans? That also contributes to your score. And then 10% is new credit. Okay, how much of your credit is very recent? Okay, opening a lot of credit all at one time can impact your score, because every time your credit is pulled, that can decrease your score. Okay, so I know it can be hard to say no to the sales clerk at the mall to save 10% on your purchase, but I encourage you to think twice before doing it, because it could prevent you from qualifying for a better rate had you just said no thank you. Okay. All right, so refinance opportunities. All right, you guys have closed on your new home. Congratulations. Okay, if a rate decreases after we've closed, okay, which could make a significant, payment difference in the interest paid over the loan, okay? Typically, you'd want the rate to be between 0.5% and 1% to warrant looking at a possible refinance. Okay. The credit union launched about a year ago our streamline refinance. And that's something that we can do at a much lower cost for some mortgages. And that process starts as low as $1,250 versus probably well over $3,000 in most cases. Okay. You can also pay down your mortgage after closing. Say, you got an inheritance or got a bonus, and you want to put that money on your mortgage to pay that balance down. You can certainly do that, and we can recalculate your monthly payment for free. Okay. Again, we're just a phone call away. Give us a call. All right. We do ask that the payment be at $10,000 or more for us to do that. Okay. All right. And now you're a new homeowner. And now maybe you want to start doing some projects and making some improvements. We have lots of options. Okay. We could do a cash out refinance. We could also do something called our Smart Line Home Equity Line of Credit. That option would not touch your first mortgage at all. This would be a second lien on your home, but this would allow you a lot of flexibility to make home improvements over a very long time because it's open for 25 years. Again, reach out to us. We can review your goals and your situation and provide you with the best recommendation going forward.
All right.
Next.
Thank you, Debbie and Andrea, so much. I just want to thank you for your presentation tonight. It's been super informative. Oh, did I lose you all? Can you all still hear me? Good. Okay. Sorry. I got a pop-up that said my internet was unstable. So your presentation tonight was very informative, and you both made a very complex topic feel much easier to understand. So thank you both again for that. For those of you that are not staying for the Q&A portion tonight, I invite you, excuse me, to take the survey that will automatically open after the event. This allows us to consider your feedback. Furthermore, don't forget to join us for our upcoming seminar series sessions. We have one on Tuesday, September 16th for raising children with financial literacy, and another one on Thursday, the 25th for aiding your aging parent with estate planning. Okay. So we did have some questions come in, Andrea and Debbie. So I will go ahead and we will get started on those. The first one was, I'm wondering how to approach buying a home with my partner. We both purchased our homes about 8 years ago. We are confused about the process of selling 2 homes to buy one and how to figure out how much we can afford without knowing exactly how much our homes will sell for.
That's a great question.
Super great.
Typically what I've seen in these situations is that individuals will connect with a realtor to go over what they can sell their current homes for so that you have a good place to start, even knowing what's the market right now. If we were doing rough estimates, we would say as a seller, you are going to take away about 9 to 10% of your sales price are going to go towards fees for selling the home. So with that remaining, say 90%, you would have to pay off any mortgages that you have, any liens that you have, and then you would have the rest available to go towards the purchase of the new home if you want, or just for savings. And then if your goal is to sell your homes prior to purchasing the new home, then you would have those funds. Sometimes you have to do the purchase of the new home contingent on the sale of your existing homes. That's very common. Or maybe you're moving into one home and you're selling one, and then you're going to buy the other home or sell the other home after purchase. There are a lot of I can see that going a lot of different ways, and it would be a great topic to go over with your loan officer because they can run various scenarios with you and include the current mortgage payment or maybe not include the current mortgage payments in your budget.
Awesome. Thank you so much. We had another one come in. Can someone on Social Security disability be approved if they are a first-time home buyer? It would be two borrowers with zero down.
Okay, so I'm sorry, Jess, what was the question? So they're receiving Social Security disability?
Yep. Sounds like we
Mhm.
have two individuals that are on Social Security disability for their income.
Okay.
They would have zero down when it comes to purchasing a home. So they just want to know if they would be a qualified buyer.
Yeah, so that's another great question. Again, we can look at our Heroes Loan qualifications and see if they can qualify for that zero down option. I mean, using the Social Security disability isn't, again, with proper documentation, that's income that we can use to qualify. We would just need to understand if we can qualify them for the zero down. If their current or prior employment or service qualifies for the zero down.
Perfect. Thank you.
Mm-hmm.
I know it's such an individualized question, so I suggest
Mm-hmm.
anybody to reach out.
Yes.
When we can kind of review those things individually, it makes it a little bit easier to have the bigger picture. We had one other question come in. Do you all work with veterans? And I'm wondering if that's veterans on maybe a certain income, and then do we maybe have any special loans that are for veterans?
Guess
You
so
want to take that or?
yeah. We're happy to work with veterans. We do not offer VA loans. There's a distinction there, but oftentimes our veterans can qualify for the Heroes Loan or the 3% down product, but we we do conventional loans, so we don't offer the VA loans.
Thank you. We had one other question come in. Somebody had asked, can we get a copy of the slides? Unfortunately, we can't give a copy of the slides, but as I mentioned earlier, this is a recorded session tonight. It will be on our MSUFCU playlist, so you can go back and rewatch it as many times as you would like. We have one more that came in. I went to a branch hoping to apply for a home loan in person, but I was told that I could not apply at the branch. Where can I go to apply in person?
Yeah, great question. So on our public site, if you're comfortable, you can schedule an in-person appointment. Not all branches have mortgage officers, but we have a lot of appointments available to serve the community. If you're not comfortable making that appointment yourself online, give us a call. Okay, we're happy to get you scheduled with someone in the manner in which you want to have that appointment, if that's in person or by phone. Just we're a phone call away. We're happy to help.
I did also just drop the link in the chat for anybody who was interested in making an appointment. So you can click on that link and then you can get your appointment set up to whether you want it to be in person or whatever. Okay, so we had one more question come in. In order to qualify for a hero's loan, is there an amount that it's capped for the loan?
Off the top of my head, I don't believe
I don't,
so.
yeah, I don't think so.
I don't know if our jumbo loans qualify, so I'd have to check that. But off the top of my head, no, with the
Yeah,
caveat that I'd want to check.
yeah, we'd want to check, but yeah, I agree.
I also will pop this link in the chat right now. That'll take you directly to our landing page that's all about our heroes loan if you have any more interest in checking that out for further information. Okay, so we had another one come in. For the 2-year income requirement, would an independent contractor receiving an I-9 need to prove that line of work for 2 years?
Yes, so we do need a 2-year history for that type of income to be able to use that to qualify for a mortgage.
Okay, that is all the questions we have right now. Oh, hold on, one more came in.
Oh.
Someone asked, where do you find the calculators for what you can afford? I will get that link in the chat in just one moment. And then we had another question come in. Can you use more than one home buyer's assistance?
Yes, depending on the program. So, for instance, we just worked with a program called Launch through the Federal Home Loan Bank of Indianapolis. And you were in that program, they could use more than one down payment assistance. So oftentimes, yes, but it does depend on the particular program that you're looking at. Also, I love all the questions. Thank you so much. Keep asking.
Yes, great questions. Keep them coming.
And just so everybody knows, I did just pop that calculator into the chat. Okay, we had one more question. How long is the process from application to approval?
Typically 1 to 3 business days, but oftentimes, I mean, that can get done in same day or 1 day. So very quickly.
Awesome, thank you. Okay. Someone asked, do we have a link for the home buyer assistance programs? Let me look really quick to see if I will look for that really quick. Give me just a moment. Any other questions?
I will mention that for homebuyer assistance programs, a lot of these come from, I mean, they can come from the municipality where you're looking, they can come from an employer, they come from a variety of origin. So it's a good idea to kind of check where you live to see if there is a down payment assistance program available. I know the Detroit area has some, Ingham County has some. You know, we work with those. There's Habitat. Sometimes they're for a particular period of time, so they may not be in effect right now, but later. So that's something to just always kind of keep your eyes and ears open for.
Thank you, Andrea. Okay, so we had another question come in. What is the average length from finding the house to closing day?
Typically, we can close in 25 to 30 days from the date that the appraisal is ordered. So a very short period of time. It goes quickly.
Right. And someone had a follow-up question, sounds like about the finance programs. Andrea, just to kind of circle back what you had previously answered, do you think it would be best for somebody to talk maybe to like their real estate agent, or maybe reach out to a lender, or maybe just hop onto Google and see what different but home buyers assistance programs are in their area?
I would probably look on Google. I would start there, check with your employer. A lot of people look at, in our area, look for MSHTA. Just for transparency, right now we're not working with MSHTA. Great program. We do have some options that are comparable. So not necessarily for down payment assistance, but kind of the end result. So keep your eyes and ears open on that.
Awesome, thank you. We had another question come in. How long is your pre-approval good for?
Great question. Pre-approval is good for 120 days, and that starts the day you apply. Okay. That's something that we can review with you. If you haven't found, the right property within that timeline, then we can certainly look to renew that pre-approval. Just check
Great.
in and see what you want to do.
Thank you. We had another one come in. How does MSUFCU compare to Zillow loans?
I'm not familiar with Zillow loans.
Me either.
I'm not either, but I'm wondering if it's like when you're on Zillow, maybe looking at a home, and it like a box pops up and it's like, see if you're pre-qualified to purchase this home now.
Mhm.
I know personal experience. I think working with a lender and an agent and having that pre-approval, you kind of already have a team or a village working with you to help you get the home that you want to purchase. So whether it be MSUFCU or someone different, I think it's always best to work with your real estate agent, with your lender. Debbie, Andrea, would you guys have any other advice on that? I would say 100% work with a lender versus just applying randomly online through Zillow.
I agree, because the credit union or any financial institution is going to be in the communities, that you live in, and is a brick and mortar building you can walk into and talk to someone or pick up the phone. We're local. Call us. We're here for you.
Yeah, I think the biggest thing is if you have a question, you want to be able to have that question answered. So if you have a mortgage officer, you have their extension, you have their email. And granted, if we're in appointments or we're working with someone, we may not be able to answer you right that second, but we can follow up, we can get your questions answered. If I'm not available, Deb can answer the questions. So it's much more personable. And I think comfortable to work with a lender, a local lender.
Right.
For sure. I think if you were just to apply online, just to a random website, that would feel scary to me. But that's my personal opinion. All right. Do we have any other questions? These have been some great questions.
I love it.
Yes.
I absolutely love it.
All right. Well, Deb, Andrea, thank you so much again for being with us this evening. Again, you just made a very complex topic feel very digestible. If you'd like to learn more about financing your home with MSUFCU's mortgage department, please give us a call at 517-333-2424, extension 2210. You can also start the application process in a branch online or at msufcu.org/home loans, or from within our mobile app. You can learn how to gain cashback rewards on the purchase or sale of your home and be connected to a highly experienced real estate agent through our affiliated moves in partnership with MSUFCU that Deb and Andrea talked about earlier. And then I would also like to remind everybody to please take the survey that will automatically open at the end of our session tonight. This allows us to hear your voice, consider your feedback, and it allows us to figure out what you want to learn more about. So please don't forget to visit us at msufcu.org/events to register for more financial education seminar series sessions. And we hope you'll join us again soon and have a wonderful night. And just also one last quick reminder, you can review this session. It will be, I believe it's 1 to 2 weeks. It will be up on our website. And you'll be able to review that then. Oh, we have one question come in. Deb, Andrea, for the extension for the mortgage department, someone is asking, is it 2105 or 2210?
It's both.
It's
So
both.
It's both.
2105 is the application and 2210 is the mortgage department. So either one, we can
Either
get
one.
you where you need to be.
Awesome. Cool. Well, thank you everybody for joining us this evening, and I hope you have a wonderful night.